So welcome back to day 2 of our conversation series, Investing in Resilience. The event is organized by SDG Impact Jordan, a flagship initiative of the United Nations Development Program. And it is co-hosted with the Social Security Investment Fund of Jordan. The purpose of the event is to provide us all with a space to rethink how we do things, to question how we make decisions and what drives us, to redesign our systems to allow for more long-termism in our strategies, and to redefine what success means to us. And also to take into consideration the broader impact of how we do business and how we make investment decisions. I'm going to use an analogy I shared yesterday for the benefit of those who weren't with us yesterday. So apologies for those listening to this again, but I really thought Malcolm Gladwell really captured well the need for us to be doing things differently. And he does this by comparing how you would make a basketball team stronger versus how you go about making a football team stronger. He says basketball is what is called a strong link sport, meaning the way you go about making a basketball team stronger is to invest in its best player. So you only need the Michael Jordan on the team. The team is only as good as its best player. Whereas football is a weak link sport. It's a highly interactive sport, and the team is only as good as its weakest player. Now I have to say yesterday's moderator, Shahm El-Wir, questioned Malcolm Gladwell's understanding of sport, but let me continue with this. So Malcolm then goes on to say that we've been running our economies with a strong link mindset, And what he means is that we've been focused on investing in our top institutions, on developing the highest end of our education system and our healthcare system. And what COVID has showed us is that the world is extremely interconnected and extremely complicated, and that we're actually as strong as our weakest link. Which means that we need to act more like a football team. To make the global economy stronger, we need to be addressing our vulnerabilities. We need to be looking at our weak links, which are basically what is set out by the Sustainable Development Goals. So be it water scarcity, food security, health, education, climate change, women empowerment. These are our vulnerabilities that we need to address. These are our weak links. My name is Rasha Manna. I had SDG Impact in Jordan, and the aim of the initiative is to mobilize capital towards inclusive and responsible businesses. Part of what we do is to work with funds to help them introduce an impact lens in the way they screen investments. We also work with them on their impact measurement and reporting. And who better to describe what we do with this initiative and the United Nations Development Program than the UNDP Administrator, Achim Steiner. We got to host Achim in Jordan last year, and he met with the investment community. And while we couldn't have him in person, Achim sent us a welcome remark video that we're going to share with you right now.
Excellencies, ladies and gentlemen, I would like to express my gratitude to His Excellency, the Prime Minister of Jordan, Dr. Omar Razaz, for his patronage of this event. I would also like to thank the Social Security Investment Fund of Jordan and the United Nations Development Programme's flagship initiative, SDG Impact Jordan, for organizing this conversation series. We mark the 75th anniversary of the United Nations this year in the middle of a pandemic, the likes of which this generation has not seen before. Global human development, a combination of the world's education, health, and income, is set to decline in 2020 for the first time since the measure began 30 years ago. The pandemic has exposed serious fault lines and vulnerabilities in societies, institutions, and economies across the world. No region or country is immune. All Arab countries, whether oil-rich, middle-income, or least developed, are facing difficulties in responding. The pandemic has also coincided with a significant drop in oil prices. It will further compound economic hardship, and there may be as many as 17 million job losses in the region alone. Some communities are especially hard hit, including women migrants and the 55 million people who already rely on life-saving humanitarian assistance. So it is critical to unlock capital to not only help countries recover from the crisis, but to allow them to build forward better and generate the level of financing needed to achieve the Sustainable Development Goals and vital targets like the Paris Agreement. This is something that the Social Security Investment Fund of Jordan is well aware of. Its investment strategy is based around targeted sectors that have direct impact on people's lives, from the provision of better services to advancing critical areas like infrastructure and education. Indeed, we know that people want their money to go towards sustainable investment. Yet the current financial system does not often allow them to do that. A new report by the UN Secretary-General's Task Force on Digital Financing of the SDGs argues that digital finance will give people much more choice over how their money works. To give just one example, a multi-million-dollar wind farm could be financed through millions of small investments made from people's micro savings channeled through mobile apps, giving them dividends and the benefit of improved green infrastructure that they can use every day. The new possibilities offered by digital finance are extraordinary. And UNDP is working with Jordan to find other concrete ways to increase financial flows towards the global goals. SDG Impact is engaging directly with business investors and policymakers to lay out the business case for their alignment of their activities with the Sustainable Development Goals, ultimately to drive more inclusive and resilient economic growth. The SDG investor maps are just one concrete outcome of the initiative. They are a powerful and practical tool providing detailed information on how specific investments and business models can advance the SDGs. This critical market intelligence will be rolled out on a searchable online platform in the coming months. Indeed, SDG Impact Jordan is looking to further support the Social Security Investment Fund of Jordan to examine investments with an impact lens. It is also about unlocking the vast potential out there. If we were to channel just 1% of global pension funds towards the SDGs, that would be double the amount of current official development assistance in the world. In closing, the United Nations Development Programme is a proud partner of Jordan in its pursuit of the 2030 Agenda. That means not standing still. Rather, it means forging new alliances with critical partners like the private sector and financial institutions, including pension funds, to help the world build forward better. As we look beyond the COVID-19 pandemic, it is a moment for the entire world, nations united, to work together to ensure that everyone is afforded the opportunity that they deserve. Thank you for your attention, and I wish you a very successful meeting. Thank you.
So a couple of logistical notes before we turn to our panel. Simultaneous translation is available. Hopefully we've addressed yesterday's hiccups. If you speak both Arabic and English, you can just keep the interpretation switched off. For our non-Arabic speakers, if you can go ahead and select English from the interpretation channels. And for those requiring Arabic interpretation, please go ahead. We're still doing this strange thing where you have to select Spanish to listen to us in Arabic. In terms of agenda, like yesterday, till around 4:30, 4:40 will be the moderated segment of the conversation. We'll then move to audience participation. You can start posting your questions on the Q&A tab. You can do that in Arabic or English, we'll translate. And you can also upvote questions by liking them. This way we'll know which questions to prioritize. And we'll also today be able to, I think the raise hand function is turned on. If you'd like to speak, we can select a few people to speak out their question. We just ask you to stay direct and to the point so that we can engage as many of you as possible. Now, yesterday we had a brilliant panel and a brilliant moderator, and we covered topics such as asset allocation strategies, risk management strategies, the effect of COVID-19 on portfolio performance, as well as how investment decisions are made in these organizations. Now, while yesterday's conversation didn't specifically relate to impact, the theme kept coming up over and over again, and all of the participating funds described the increasing shift towards more responsible investment practices. And that's the subject we're going to focus on today. I'm going to invite our speakers to turn on their videos as I introduce the session. So sustainable investing is an approach that considers environmental, social, and governance factors in portfolio selection and management. This has come a long way, and more than 1/4 of assets under management globally are now being invested according to the premise that ESG factors can materially affect a company's performance and market value. In today's discussion, we'll touch upon themes such as approach, regulation, fiduciary responsibility, performance, reporting, and data and standardization, amongst others. The objective of the session is really to unpack the nuts and bolts of sustainable investing and provide you, the audience, with an understanding of the principles and practices that underlie this investment approach. So a warm welcome to all of our panelists, and thank you for your time. I'm going to just make a round of introductions to introduce our audience to who's with us on the call today. Our first panelist is Anne-Charlotte. Anne-Charlotte is the Senior Manager of Sustainability at the Third National Swedish Pension Fund, AP3. We had our colleague Torbjörn with us on the call yesterday. She is a member of the sustainability team and is responsible for ESG integration. The team works across all asset classes in collaboration with the fund's portfolio managers, and has been with AP3 for over 25 years in various functions. AP3 has over 38 billion in assets under management. They look to make an annual return of 3.5% in the long term. And in 2019, the fund announced new sustainability targets that involve halving their carbon footprint and increasing the proportion of green bonds and other strategic sustainability investments. Our second panelist, Heidi Finskas, is Vice President of Corporate Responsibility at Norway's KLP, a position she's had since 2015. Heidi is Advisor for Responsible Investments in KLP from 2008. KLP is Norway's largest capital fund company with around 72 billion in assets under management. They're a pension company for the Norwegian local government and healthcare sector. They integrate corporate responsibility into all their activities, increasing investments that promote sustainable development, pushing companies towards more sustainable operations, and developing products and services that contribute to positive social development. Also on the call is Deborah Ing. Deborah is the director of the Ontario Teachers Pension Plan. She heads the plan's responsible investment team and develops and leads the plan's responsible investing strategy and climate change initiatives. She is responsible for key deliverables across a number of pillars, including ESG and climate change, thought leadership and innovation, ESG integration frameworks and tools, and corporate engagement. OTPP is Canada's largest single profession pension plan. They invest on behalf of 329,000 active and retired Ontario teachers. Their assets under management around 134 billion euro. And our last but not least speaker is Dirk-Jan Verzuu. He is the lead portfolio manager of impact investment at PGGM. He has over 25 years of investment experience. He was previously with ING Investment Management as senior investment manager for the ING Global Opportunities Fund and as the responsible manager of the ING European Growth Fund. PGGM is a not-for-profit cooperative pension fund service provider in the Netherlands with 252 billion in AUM. PGGM also manages the assets of PFZW, the second largest pension fund in the Netherlands. So welcome all once again. It's good to have you with us on Zoom, though we would have loved to have you in Jordan. Hopefully we'll be able to plan that for sometime soon. But in the meantime, to get us started, if I can ask each of our panelists in turn to introduce yourselves, your name, your role, your organization, and what sustainable investing means to your organization. Heidi, can we start with you?
Absolutely. Thank you so much for that introduction, and thank you for the opportunity to be here with you today. When it comes to sustainability investing, this is really a journey that we embark on together. Yes, in KLP, we've been working on that since the 90s. So we have quite a long tradition, but still this field is evolving and we do that together as an industry and not only single players. So I really appreciate this opportunity here to have a dialogue and be able to ask your questions and also get your feedback. As you said, yes, KLP is providing pensions to local governments and health sector here in Norway. We're a mutually owned company, which means that our customers are also our owners. So that means that our stakeholders and beneficiaries are more concentrated instead of having two separate groups with separate interests. And I think that is important when we talk about the sustainability strategy as well, because of course where it all starts is of course the needs and the wishes of the beneficiaries, which is our owners and customers. If some of you are hesitant as to whether it is possible for a mainstream investor to work with sustainability, I would say that KLP, yes, we are an example of that is possible indeed. KLP is definitely a mainstream investor. A highly diversified portfolio and also a belief in market efficiency and index-based portfolio. That is two keys to our investment strategy. And that means that we are invested in more than 7,000 companies globally in more or less every sector. So diversification is really a key to us, and that of course is an important basis for how we work with sustainability. We said, what does sustainability mean to us? Well, our objective is to deliver a competitive return over the long term as well, not only this year absolutely, but also decades ahead. So to deliver a competitive return while we at the same time fulfill our commitments to the UN Global Compact, to the principles for responsible investment, to citizenship, try to contribute to a better world while we deliver that as a high return as possible. That is the way that we see sustainability. When you work with sustainability, you can look for it from two different perspectives. One perspective is the responsibility perspective, that we all have our responsibility to contribute to a better world. The second perspective is the financial risk perspective. We see the sustainability issues and the challenges it poses to economies, to companies, etc. And we see that that will also potentially be a financial risk to us. So those two perspectives, I would say that at KLP we work with both of them. Both are equally important, but it's very important to try to differ which perspective you are working with, which perspective you are talking about in different parts of the strategy. So that would be an advice I would also give to other pension funds to be clear about what perspective you are focusing on and what perspective that is most important to you.
Thank you, Heidi. That set a good scene about KLP. And Charlotte, can I invite you now to, I know you've got some slides up if you wanted Dana to pull those up for you.
If I could thank you first for having invited me to this session. And I know we had some slides yesterday, and if you can, the first of them will be equal to what was shown yesterday, but we could turn up the first slide, please, just to let you know what AP3 is. The next one, please. Yes, as was also said in Rasha's introduction, I'm working with AP3 as a senior manager of sustainability. AP3 is a part of the Swedish National Pension Fund system. We are buffer funds in the system, so to say, balancing the system, and we are working for all present and future pensioners in Sweden. It's, as I said, this combination of pay-as-you-go and a buffer capital. There is very limited flows from the system. As of today, we are actually in a deficit, and that is some money flowing back to balance the system. Sustainability is the AP funds got the new or revised law 1st of January 2019. In that law, sustainability is a part of the law, part of the expectations. So there is no way for us to hide from sustainability. The thing is rather, how do we do it? And that is also set out to be exemplary. And then, of course, exemplary is to be interpreted. But we are said to be a responsible investor, a responsible owner. We should also work to contribute to sustainable societal development. And we should also think about, I mean, what is expressed in the Brundtland Declaration already many years ago, to be thinking about both the present and future generation. So if you jump the next slide and then go to the next one, I can just shortly tell you a little bit about how we have done that. And the next slide, please. This shows that we are a global investor, a universal owner, and from a universal owner perspective, that is also part of our thinking about sustainability. Next slide, please. We are UNPRI signatory since 2006, and together with many others today, but still a part of the process. As I also said, sustainability, we have an holistic view on sustainability, with the thinking about sustainability and responsibility integrated across the asset management in all asset classes. And we will come back to how that is done and how it could be done, and maybe how you dream about it being done in the future. Active ownership is a bearing pillar in our strategy, and working together both among the AP funds but also with other investors is a key for sustainability, for sustainable development, I would say. This is also part of what the session that we have today is about, sharing and learning from each other. Sustainability is a very complex matter, and to bring it forward and to continue the process, sharing of knowledge and experience is vital. Climate is, of course, on our agenda, very high up, or maybe at the top, as for many others. But we should also think about climate from a broader perspective, but climate having implications for so many people in many different ways, also relating to the SDGs that we support and also try to contribute to in our investment choices. So just to put it short, this is a journey. It's a process that needs to continue for longer. We think it as a prerequisite for our long-term value creation. We think it needs to be done in collaboration and learning and sharing with others, but you also have to set out goals to drive that process forward. Thank you.
Thank you, and Charlotte. Deborah, can I invite you to go next?
Absolutely. Good morning or good afternoon, everyone. It is a pleasure to be here, and thank you, Rasha and the UNDP, for inviting me here. As Rasha said earlier, I am the head of responsible investing for Ontario Teachers Pension Plan. We are Canada's largest single profession pension plan. We manage, I have it in Canadian dollars, not in US, but it's 207 billion in Canadian dollars. It sounds a lot more impressive. And we do it on behalf of 329,000 active and retired teachers. We are a very active plan. Ontario Teachers is diversified, like the other investors here, across the globe and across all asset classes. We manage about 80% of our assets directly, not through external managers. And we also have significant direct holdings in private equities, infrastructure, natural resources, and real estate. In total, our private assets add up to about 90 billion. So almost half of the plan is in direct private assets. And I think this is really an important point and a key, feature of our responsible investing approach at Teachers. We are a capital provider. We give money directly to companies to grow and sustain their businesses. These assets are large, they can be illiquid. So it is critical from the get-go that we get sustainability right in these assets. On the flip side of that approach, it also gives us a lot more influence with these organizations to affect change. Now, when we think about responsible investing or sustainable investing at the Teachers Pension Plan, our goal is really to manage the plan through the climate transition, through the sustainability challenges, to ensure that we are able to pay pensions for teachers for all future generations of teachers. And when we think about responsible investing, we really apply 4 principles that guide us in our approach. And those are integration, engagement, influence, and evolution. First, on integration, we consider the impact of ESG considerations and factors across the entire investment cycle, from due diligence to asset management and even to exit. It also helps us identify opportunities. It is part of our due diligence process and our value creation activities. Our second principle is about engagement. So we are not a passive investor that gives capital and makes an investment and hopes that it provides the risk return we expected, but we engage with our companies. And this is for 2 reasons. First, sometimes we don't have all the information we need about the companies to integrate into our investment process. But it can also be to work with companies to unlock opportunities, address issues, and encourage positive behaviors. The third leg of our approach is really about using our influence. So Ontario Teachers isn't the biggest plan here in the room by a long shot, but we do believe that it is important that our voice is heard on the global stage, and that we can use the industry to create a positive environment for all of our investments. We would engage with standard setters and regulators and policymakers to really help drive standards, disclosure practices, and regulations that actually help all of our companies. It really is the tide that lifts all boats, and this is an important element of our responsible investing approach. And finally, we think it's critical for the plan and for our practice to continually evolve, and for the teams to stay on top of emerging ESG issues and the tools and processes. As Rasha said earlier, this is very much a team sport for Ontario Teachers. Our sustainability approach is probably only as good as our most cynical or dubious team member. And the responsibility for integrating ESG, sustainability, and climate change lies in the hands with each one of our portfolio managers. And we have been evolving our practices since about 2008, when I was charged with initiating this approach at Ontario Teachers. And over the years, we have been expanding and building our knowledge and capability and enhancing our practices. Certainly in today's environment, macro issues such as climate change, inequality, COVID-19 have really worsened as time goes on. And there is a need to ensure that we have the right practices and the right culture in place at the pension plan to manage these issues effectively and responsibly. And I'd say the last bit on our evolution, we have evolved from, looking at sustainability primarily from a risk-based approach, making sure that our assets are protected, are sustainable. But as we evolve, we realize that the challenges of climate change and sustainability will not be solved by risk management alone, but by ensuring that we flow capital to the solutions to these challenges.
Thank you, Deborah. We're going to get into the approach a bit more during our conversation. Dirk. And Dirk, you're also on mute.
Yes, hi. Well, thank you for the kind introduction and the invitation. My name is Dirk-Jan Verzuu, and I am the lead portfolio manager of our global equity impact portfolio. I started with PGGM in 2015 to launch this product, and I have some slides. Maybe if you can pull them up, starting on the second slide. PGGM is the second largest pension fund in the Netherlands. We have 250 billion assets under management. And we do that for 2.5 million active members. And our biggest client actually is the healthcare sector in the Netherlands, which is over 200 billion of the total assets. We invest the assets globally across all asset classes, and around 75% of all assets are invested in public markets, and 25% is invested in private markets. Within the public markets, we have an impact approach. Right after the financial crisis in 2008, we actually reviewed our investment strategy, or PGGM reviewed the investment strategy. And instead of doing less bad, we wanted to do more good. And so we came up with 4 themes where we would like to invest in. And we actually developed this before the United Nations came with their Sustainable Development Goals. The 4 themes are healthcare, food, water scarcity, and climate change. And if you can jump to the next slide. Our team invest in purely impact companies. So we have identified a global universe of around 350 companies, which we define as pure impact companies. And the team is only allowed to choose from those 350 companies. From that, we construct a portfolio of around between 40 and 60 names. So it's a pretty active and concentrated portfolio. And we really use a thematic approach. Core of our strategy is our longer term investment horizon. So we only buy companies which are impactful and where we want to have a stake for at least 10 years. So we also build an active engagement with the management, and not only to know about their operations and their financials, but of course also to engage with them on ESG, but foremost to get some impact data. Because our client wants us not only to invest in those impact companies, but also wants us to measure the impact those companies are generating for society. And if you can jump to the next slide, please. So the former slide. So yes, where are we on the investment or the impact horizon? If you take the traditional funds where the managers only go for financial gain, and on the other side you have philanthropy, we are clearly in the thematic side. And that means we invest in high impact solutions, and we see impact companies and sustainability actually as an opportunity. But it is our fiduciary duty to generate at least market returns or beat the benchmark. And that is a broader benchmark. And it actually comes down to beating this benchmark, because that is what the client actually wants. So we don't, or our client doesn't want to pay for sustainability. And that is because of the Dutch Central Bank and the regulation. It's our fiduciary duty. So the 4 themes you can see on the next slide, I already mentioned them. The 4 themes are climate change, food, healthcare, and water. And in those 4, we actually think those 4 themes are not a risk if you invest, but are an investment opportunity. Because I think that these 4 themes are delivering a longer-term structural growth drivers. And that is actually what you saw in the COVID correction earlier this year, especially climate change companies, but also food security companies and healthcare companies were performing pretty good. And that is because COVID didn't change the structural need for companies that address these issues. So that's why our performance is actually pretty good. And we are, since inception, beating the internal benchmark, but also beating the broader FTSE world and the MSCI world. If you can jump to the next slide, please. So, as I said, we developed the 4 themes before the United Nations developed their Sustainable Development Goals. And somewhat lucky, our themes are overlapping with the Sustainable Development Goals number 2, 3, 6, 7, 12, and 13. Back then, we thought those were the ones that were most investable. And so we could find a lot of companies that address those Sustainable Development Goals, but are also having good financial opportunities. But at this moment in time, we are actually looking, or we are reviewing the strategy to broaden out to more SDGs. This is under consideration. Back in 2015, we aimed for 20 billion in investment or in impact investments in the year 2020. Well, we are now in 2020 and we are slightly behind budget. So we have reached 18 billion. But for the next 5 years, we are actually targeting a bigger amount, which could be 20% of our total assets. And therefore, we also need more sustainable development goals. So the impact team really looks at sustainability from an opportunity angle, but we have also passive money in public markets. And with this passive money, we actually use sustainability more from a risk perspective. So we use certain ESG screens and cannot invest in a number of companies which have a bad ESG score. And that's it for me for now. Thank you very much.
Thank you, Dirk. So I actually don't think it's a matter of luck that you coincided with some SDG goals. It's that you correctly identified these are societal challenges. So we should have come up with the same themes. Dirk, I'm going to stay with you a second longer. I think there's so much terminology around the impact investing space that this fragmentation around terminology is often blamed for I guess, the fragmentation of the industry. And a lot of people, when they say I'm an ESG investor, people misconstrue that to mean I'm an impact investor. What is the difference between both?
Well, we actually see impact investments as ESG 2.0, because ESG looks at the sustainability score of an internal household of a company. And so if a company has, let's say, a lot of women in the board, has very strict policies on all kind of subjects, then they score on an ESG table very well. But for that matter, then you can have, let's say, mining companies or oil companies, which we actually don't find that they have a positive impact. Those companies have a very good ESG score. But if you look at the external situation, so then you're going to look at what the products of a company are doing for society. And that is what we call impact. But if you do that, we have to use our own definition, because there is no global impact definition. And that is a problem, of course. And therefore, PGGM is working together with APG, which is the bigger pension fund in the Netherlands, to standardize a taxonomy. So in this taxonomy, we actually show what we think are good impact companies and share this with the rest of the world. And this is still under construction. But for now... I'm
going to go back to that, because I think that's very interesting, that thing you're working on at the moment. Heidi, Dirk showed us that slide that has the range of approaches, and it goes all the way from negative exclusion to SDG aligned focus. Where along that is KLP? Can you shed some light on that?
I think that slide was very good, and I hope that's useful for all of you as well. I just want to echo Dirk-Jan's, well, you said that it's a lot of confusion, and these words are intermixed, are mixed. So yes, we are, from the risk side to the sustainability side to the impact. That's the spectrum where KLP is. Just to give you a few examples, first of all, Deborah, you mentioned 4 pillars that you're working with. Those are also the same that KLP is working with. We have an exclusion policy based on certain criteria. We engage with companies, meaning that we vote at general meetings, and we have a direct dialogue with companies' boards and management. We work with integration to try to do that in an even more systematic and more sophisticated way, meaning to integrate the ESG into analysis in all due diligence processes, whether that be projects or external funds. And also the 4th pillar would be investments with an even stronger sustainability agenda. And that could be thematic investments. So for instance, we have some parts of the portfolio is the Swan, Nordic Swan eco-label labeled funds, which are fossil free and consists of companies with a better ESG score. But then we also have a dedicated portfolio in infrastructure, meaning renewable energy, both in Norway but also globally. And then we also have a dedicated impact fund. It's not impact first, as Dirk-Jan's slide said, but is a return as well as a dedicated impact, because we that was our way to take the sustainability work to the next level, and it really aligned with the sustainable development goals. So we now have a impact investment portfolio where we invest in microfinance and banks in developing countries, as well as in new renewable energy projects in developing countries. So those are a few examples of the range that we're working with. But the key is that sustainability should be integrated into all parts of the portfolios, all asset classes. And of course, some asset classes are more mature than others, but still we're working on it to be more and more systematic in all parts of the portfolio. And perhaps I should add to that, that the basis for our work and sustainability agenda has, from the beginning, has been international norms, meaning UN conventions, ILO conventions, and later on the Sustainable Development Goals. And that has been important to us because we're not interested in creating a KLP-specific definition or KLP-specific agenda. Neither are we interested in creating a Norwegian-specific or Norwegian-based agenda. We are investing globally. We have co-investors from all parts of the world. So we would like to work for and find a common ground. And I think the international norms are that common ground that we all can unite around and together work for.
Thank you. I find it interesting when a fund has both a part of the portfolio that they call is a sustainable portfolio, which I guess means the other part is not sustainable, is where does your fiduciary duty lie if part of your non-sustainable portfolio is harmful to the environment or to society? I don't know if any of you have this sort of mixed portfolio and where you stand with your non-sustainable component of your portfolio. And Charlotte, does that apply to you? Can you unmute yourself again, Charlotte?
So now you can hear me.
Yes.
Sorry for that. No, but I think this, whether you have a sustainable and non-sustainable investment, at AP3 we're trying to have an holistic view on sustainability. The whole portfolio should be sustainable. That is, as I said initially, when we started, seen as a prerequisite for the long-term value creation. You cannot, as a long-term investor, invest in something that is unsustainable, something that will not live up to your return requirements. And then you can say, well, you can get your return from something that is unsustainable. Yes, you can for the shorter term, for sure. But for the longer term, that has to be questioned. Our portfolio is, we're talking about that you have sustainable investments, and then we have sustainability or dedicated thematic investments for sustainability. The basis is that everything should be sustainable in the meaning that the businesses have staying power from an ability to adapt. And that is not easy to find out. It is a learning process. But you will have to find out that through screening, through integration, through engagement with companies, to what extent they are actually trying to change, transform, and adapt their businesses to the changing world. I mean, we cannot just talk about portfolios. We are universal owners, and thus we also have part or own a part of the global economy. In addition to that, talking about sustainability and talking about the SDGs specifically, you can of course invest where you have a more direct intention to contribute to the advancement of the SDGs. We also have investments in, especially in the alternative space, in water, in infrastructure, within some private equity funds that are dedicated to drive change and development within technology, with response to different behavior and preferences among consumers in the society. So you have to say, leaving the traditional part aside, that is not sustainable. At the same time, not being philanthropical or charity. You have to be in this band in between. You are responsible. You are investing for sustainability and sustainable investment, and all investments have an impact or an outcome in one way or another, and that will. The tricky thing, or the big of the challenge, is to find out that outcome or the impact, if it's more positive than negative, because there is no one thing that is undivided positive, but you have to see to the net, and that is part of the big challenge that we have. And then we'll come into the area of data and information, how you treat that.
Yes, we're gonna get to reporting and whether organizations are reporting just on the positive impact, or do you also report on negative impact? But Deborah, if you can tell us your fund. I mean, the Nordic countries are so ahead of the game with the sustainability agenda. So it's interesting for us having OTPP, because you're kind of a bridge between where we are in the region and where we want to all strive towards. And also, if you can touch upon how the notion of fiduciary responsibility is evolving within your organization, and what you see your fiduciary duty is, and where the pressure is coming from for it to evolve. Is it beneficiaries? Is it regulatory?
I should learn how to unmute myself right away. You know, we're all pension plans, and we all have a fiduciary duty to act in the best interests of our beneficiaries. So I think, you know, when we think about broad ESG, responsible investing, sustainability, you know, I think it's well understood that that is part of our fiduciary duty, to ensure that we're managing material ESG factors that could impact the portfolio. I think one thing to think about is that as pension plans, you know, we have, you know, members that span multiple generations. We are a eternal pension plan. So a teacher that enters the plan today works on average 26 years. They're retired for another 30 plus years. So right away, our pension liabilities are spanning 50, 60 years. And I think it's part of our fiduciary duty to ensure that, you know, we are sustainable in the long run for all of our members. And I think the important thing to note there is that it is owed to all of our members. And when we think about how interconnected the world is, and that the actions that we take today and that our investments take today has an impact on tomorrow's outcomes, you know, fiduciary duty to us becomes an intertemporal challenge. We need to earn the returns required to pay pensions today and tomorrow, but we also need to do it in a way that really doesn't compromise our ability to meet our pension promise. So when we think about things like the Sustainable Development Goals, these are areas of investment that contribute to better outcomes in the future. And I think, you know, from that concept of universal investor that Anne Charlotte has talked about, it really becomes part of that fiduciary duty, is thinking about how, you know, short-term factors and long-term factors really come together to ensure that, you know, the longevity and sustainability of the pension plan.
Thank you, Deborah. Dirk, I know that it's a regulatory requirement in the Netherlands, profit maximization. Or
yes.
Right?
Yes, well, we have the fiduciary duty to invest our money where the returns are, let's say, best. So if you look at that, then you would say, well, impact investments or sustainability are only an hindrance, and let's just invest in all companies that generate a good financial return. But you see that the environment is changing somewhat, and that actually also the government and the regulators are understanding that in the longer term, those companies that actually do something good for society, let's say solve climate change or help to solve climate change, are actually going to perform better than the market on average. And that is because a lot of governments, especially in Europe, are also want to tax companies that are, let's say, polluting or are heavily emitting CO2. And this is a new development, because in the past, also in the Netherlands and in Europe, companies could happily emit CO2 and not paying for this. So companies did produce a lot of products, and meanwhile they were actually hurting the environment. And now times are changing, and governments around the world are saying, well, should those companies not pay for what they do to the environment? And if that starts to change, you actually see that those companies that do good are going to outperform the market. And that is something that we believe strongly. And that's also something that you saw, I think, this year during the COVID crisis. So this is changing, but we are engaging also with the Dutch Central Bank and with the regulators to discuss these subjects. But you see that more and more they move towards more sustainability. And once we want in the Netherlands, we want companies to pay for the CO2 emissions. So we are going to price CO2 emission rights. For products that we import, those companies have to pay a penalty if they emit a lot of CO2, and this is broadening out to the rest of Europe. We are not there yet in Asia or the United States, but we strongly believe that we are going to this direction.
We're going to get to the role of regulators, and you took me to the next question. When we were chatting earlier, you said your fund performed really well during COVID, but at the same time, you also said you didn't believe in statements that said ESG or green equity outperforms the benchmark. So do you believe there are significantly statistical differences between mean returns of sustainable investments versus other classes?
Yeah. Well, you know, I was not raised as a sustainable or an ESG investor. I was just a hardcore portfolio manager that happened to be a thematic investor. And when I talked to PGGM at a certain point in time, I realized that I, for my fund at ING, was already investing in those longer term themes, because those were themes that I believed in. And of course, especially this year, you can read a lot of academic research that states, well, ESG is an outperforming asset class because we have done research, etc., etc. But I don't believe so, because you have to really dig deep in those research documents. You always can have some remarks on the way how they define the benchmark, etc. But it's also much more simple, because at the moment there was strong academic research that ESG is the outperforming asset class within equities, then it would be arbitraged away within 24 hours, I would say. Because if you have scientific proof for something, then everybody can read that, and then there's no possibility for outperformance. That's something that I believe in. But what I do believe is that ESG or impact investing is actually forcing you to invest for the long term. And that is something that not a lot of investors do anymore. And what we actually do at PGGM is a kind of time arbitrage, because where most of the investment community only give themselves a quarter or a couple of months for their investment, we give ourselves, let's say, a period of 10 years. And we see that, especially over the last 5 years, with that approach, with also selecting good quality companies, because that's our philosophy, we were able to outperform all benchmarks that were set against our products. And ESG, I don't believe you can be an ESG investor and invest short term, because ESG is related to one in a, let's say, 10-year times event. Think on British Petroleum in the Gulf of Mexico. They had an oil spill, and our ESG fund at ING was not invested in British Petroleum, purely for the reason that they didn't have good enough reports on security. Well, you can invest in British Petroleum, and or you cannot invest in British Petroleum for these reasons, but you can only benefit from that when something goes wrong. But this doesn't happen every year. This goes one in let's say a decade. So ESG forces you to invest for the longer term. That was something that I believe strongly in.
And I'm going to ask the same question to you, Anne-Charlotte. But Dirk, I think what you said confirms that SDG investing is mainstream investing, because you were doing it at ING prior to even realizing your SDGs. So it is for mainstream investors.
It is for mainstream investing as long as you are, let's say, thematic, and you look for longer-term structural growth drivers. And so automatically, you are a long-term investor. Then it can be mainstream.
And Anne-Charlotte, your thoughts on the performance of ESG or SDG or impact investing versus the broader benchmark?
Well, if you talk, my first reflection is whether you can talk about sustainable investment as an asset class. The thing is, shouldn't all investment be sustainable, especially if you are a long-term investor? Your investments have to be sustainable to give you the long-term value. That is one thing when I spoke about sustainable investment overall. Then, of course, to build on that, you can have dedicated, more sustainable investment that are linked to the SDGs. All sustainable investing is, of course, to be for the longer term. We are supposed to be long-term investors as pension funds. As Deborah mentioned, and Dirk also, we are investing for the longer term, or supposed to invest for the longer term. And over that longer term, sustainability will give a better return, or the required return. That is our belief. That's why we do it. So first, sustainability is not an asset class. It's a way to invest and think about investing. Secondly, if you invest for the longer term, sustainability becomes a prerequisite for you to get your risk-adjusted return that you are set to achieve, in line with your fiduciary duty, in line with your responsibility for both present and future generations. So as I see it, of course, you will have, as in all investment, there will be periods of less good performance, but that's what investing is about. This is not a specific science. This is based on beliefs, what will be the good factors for future return, and sustainability being part of that.
So Anne-Charlotte, what is your role within your portfolio companies to drive impact? How do you use engagement to have impact at your companies?
Well, engagement is done in different ways. The AP funds are working together in the Ethical Council, where you, so to say, work together to have more of a voice. We are in smaller owners in non-Swedish companies, and thus to drive change, and also to react on breaches of international conventions, etc. The AP funds work together to see to that you have more positive outcome or change within those companies. On our Swedish portfolio, we are working directly, both owner responsible, stewardship responsible, and the portfolio managers to drive change, and also, as I said, as a consequence of that, or a result of that, more positive impact or outcome.
Thank you, Anne-Charlotte. Heidi, I'm going to ask you the same question. How do you engage with your companies, your portfolio companies, to drive impact at that level?
Of course, when you're a universal owner and have ownership in such a large number of companies, we have to be very strict about prioritizing the engagements. We normally start with engagement themes, where we engage with a number of companies along the same topic, be that tax issues or deforestation or shipbreaking practices. So we try to make analysis based on a theme, identify which companies we should engage with, and then try to get that dialogue well, good and constructive. So that is our way of engagement, and also to collaborate. That has been important. Anne-Charlotte, you mentioned that the AP funds are collaborating. We have also collaborated together with you on some cases, and other investors, both Nordic and international investors. So I think we'll see more and more collaboration around engagement, again, based on the common goals and standards. I think that's will be a more effective way for the investor community to engage with companies, because engagement is also, it is a challenging space, and it is very long-term work before you see any results, and the more investors, the stronger the voice. So that those investor collaborations are very important. And also we mentioned that a bit earlier, that engaging about, well, developing standards because engagement with single companies, that is well and good, but to be able to raise the level and raise standards in a whole market or in a whole sector, that is even more powerful. So that is also a very important tool for the investment community to be there to try to improve corporate governance standards, improve well, deforestation practices within the agriculture sector, or what that be. So that is definitely a way, a role for investors to play there in the Middle East as well.
Sure. And if I stick with you and we talk about data and the lack of standardization in terms of impact measurement, and the fact that so much development money and investment money is going towards impact, and we're seeing a lot of impact washing or greenwashing. What do you think the challenge is there, and what can be done in terms of, and UNDP is working on developing impact standards, so kind of the IFRS of accounting. This is a global project that I know many of your organizations are part of. But what is the challenge, or how do you go about collecting data from your companies to do your own impact reporting? Heidi?
Yes, I think that is definitely a challenge. It is both about access to data, but the leverage and the quality of data, but it is also about that lack of definition and standards that you mentioned. Of course, we must always remember that the situation now when it comes to data and standards is very different today than compared with only 4 or 5 years ago. It is improving year by year. But again, when it comes now to especially the Sustainable Development Goals, there is, I would say, a lot of greenwashing. There is a lot of investors now that are talking about impact, and there is now discussion about, okay, when can you actually talk about impact? Is it business as usual? You just add the impact layer on and start with talking about it with different terms. And also, what is impact? Is it impact while working about with equality in a Nordic company? Is the impact there the same as if you're working with equality in a company from a region where equality is on a different level? Is it about impact when you work with water issues in the Nordics, or if you work with water issues in South Africa? Just to give some examples. But what's very interesting now is what's happening in the EU when it comes to regulation. The EU has now developed this taxonomy for what economic activities can be viewed as sustainable. And that is, yes, that the starting point there is climate change and what is a sustainable and climate friendly activity. But still, that is the first kind of common definition about what sustainable means, with very clear thresholds defined with a clear performance criteria. So I very much look forward to see the effect of that. That taxonomy regulation also brings along with it a number of requirements when it comes to reporting, which means that we as investors are now required to report, as well as companies that are required to report on these indicators. So as of today, we don't have the data that we need to be able to report according to the taxonomy, or to be able to even assess companies according to the taxonomy. But I think when those types of requirements are coming through the EU regulation, that means different times. Times are changing, so I think we'll see a quick improvement when it comes to data in the coming years.
Yeah. Dirk, so do we wait for the regulators, or are there ways to circumvent and report on impact? And if you can touch upon the new methodology you're working on with UBS Asset Management.
Yes, well, you can certainly circumvent the regulators, because the regulators don't demand certain impact data, and that is because impact data just don't exist, and that is of course very, very difficult. You have some ESG data, and you can have a lot of question marks about the quality, but if you move one step further and you go to impact data, then you will actually find out that there are no impact data. And nevertheless, we have to measure the impact of the companies that we invest in. So we have collaborated with UBS and Harvard. UBS is also managing a part of the mandate. And we were also cooperating with UBS and Harvard together. So we decided, well, let's not wait on the impact data. Let's do it ourselves. And we have done it in two ways: a top-down approach and a bottom-up approach. The top-down approach was actually led by UBS, and we participated in that. But so we had some cooperations with the University of New York and Harvard University. And what the scientists there try to do is they try to develop impact models for every sector or for every theme that we invest in, so that you could easily measure the impact of an entire sector. But we actually found out that is not possible, because companies themselves are so different from each other that you cannot write a model for a sector. And take two companies like Unilever and Nestle. I think that most of our listeners know these companies and actually would say, well, these companies are pretty comparable. But if you're going to look at the product level, what the impact the products deliver, they sell, you actually see that those companies are totally different. And the scientists could not come up with one model that could model these two companies. So that is actually somewhat of a dead end. And what we do at PGGM internally, we do it from a bottom-up perspective. So we engage with companies, and we have a longer-term view. We talk to the management, to the CEO and CFO directly. And that is because as portfolio managers or as analysts, which look at the financials and the organizational issues, you get direct access. And you also have direct access on sustainability or impact items with the CEO. And we just, for example, are then engaging with the management of a company like Croda in the UK. They invited us to speak to their top 20 or top 50 managers. We went over there. We told them what kind of impact measures we are looking for. And they set up projects within Croda to come up with these kind of measures, because they also believed, let's say, that impact in the longer term is generating good performance and is also placing Croda as a good company in the world. And so what they did, they mentioned us in their annual report, but this is a close relationship. Other companies which are very, very difficult to measure impact with are for example, healthcare companies. A lot of healthcare companies are positive for society because they, let's say, they make you better. But the thing is, it's very difficult to measure the impact. So what we did with a couple of large pharmaceuticals is we started in the Netherlands and we set up projects to measure the effectiveness of certain medicines they sold in the Netherlands. And we try to broaden this out to Europe and then to the rest of the world. But these are all very labor-intensive projects, which take a lot of time. But for us, it's doable because our impact portfolio only has 50 companies, and we try to measure the impact of those 50 companies. If you want to measure the impact of 2,500 companies, if you have a very broad benchmark, and then it's a very hard job and it takes a lot of work. But we don't want to wait for the impact measure before there's standard impact measures. We are developing them ourselves because they're not available right now.
And the labor intensity of impact measurement and data collection and reporting is part of the pull factors when it comes to impact investing. I'm going to take a question from our audience also on reporting, and Deborah, maybe you can touch upon it because I know you guys are developing in this area of impact reporting. What is it you report, who are you reporting to, and who are you accountable to in terms of your sustainable investment practices? And what information do you disclose? Do you report on both positive and negative impact? If we can talk about that, please.
I could. It'd be fairly short. I mean, we haven't really. We're still at a much earlier stage, I would say, than my European colleagues here in terms of being able to measure positive impacts from our investments. We have been looking at SDGs and how to measure impact for a number of years. And I don't think, you know, like many here, we are challenged with the data. We are challenged with, you know, consistent, you know, taxonomies for measuring impact. I mean, the SDGs are 17 goals with 196 underlying, you know, goals and targets, and each one of them would need to be measured in a different way. and trying to understand, you know, how you capture that across the entire portfolio is quite difficult. And, you know, Dirk-Jan talked about the challenges when you have 40 companies, and then the even greater challenges when you have 2,500, and teachers has about 2,500 of those. I would say that, you know, we have been, you know, working and reporting and, you know, really providing more and more transparency to our members and stakeholders, really on our approach and how we think about sustainability across the entire portfolio. You know, and on Charlotte's comments on, you know, there isn't a sustainable investment bucket over here, all investments are sustainable. So it's really challenging to think about, you know, reporting on positive impact on only a part of the portfolio. So it's an area of, I think, work. We have been looking at the EU taxonomy and pouring through the taxonomy to understand which of those taxonomies we can apply to our investments. And then we have been, you know, thinking about, you know, green bond issuances, and as part of the green bond issuances, there would be a impact report, and that would be part of the reporting process. So I would say we are in early days there, and the importance is really, you know, being engaged across the organization to get input on people from all the investment teams on how they're thinking about sustainability, how they're thinking about SDGs in their investments, and then how do we report on it collectively. It's I'd say work that is underway, but maybe the point to the audience here is, you know, start small in terms of how you think about what you want to report on, and every year you can build on that. And I think the important point is really just to get started on that journey, and reporting really is helpful in that, because it does create that discipline, that requirement to gather people to collect information and report on them. It probably didn't answer your question directly, but hopefully it'll be useful for some who are maybe at the beginning of their journeys as well.
That's exactly why I put that question forward to you. And Charlotte, I'm going to ask you the same question, and I'll also put forward a question from an audience member directed to AP3. And this is a renewable energy fund in Jordan asking if you invest in funds investing in sustainable renewable energy projects in the Middle East and North Africa. But if you can talk to us about your impact reporting practices at AP3 first.
Yes. Do you think is it possible to bring up my last slide?
Of course. Dan, if you can pull that up for us, please.
That would be part of this reporting, and also talking about impact or outcome and measurement, and link to the SDGs.
So while the team pulls that up, your question to, are you investing in sustainable renewable energy projects in MENA, Middle East or North Africa?
No, for the time being, we do not. We have limited our investment within the alternative space to developed markets, but that is where we are now. Doesn't mean, but we could also say that AP3 is very have high ambitions and are investing in green bonds, and indirectly we, so to say, might end up in will end up in also that region in the world. If we go to the last slide where it says a continued journey. Yes, this one, thank you. As I hopefully mentioned in my introduction and early on in this call, AP3 set out, started to set out some climate-related goals already in 2015. The first goals were for the period 2015 to 2018. They were more or less the same as the ones that we see today, and the ones that we have now for the period up until 2025 is a continuation of the goals and ambition that we expressed back then. And this relates both to our reporting. Those goals are reported in our annual report and other reports. The AP funds have worked together to decide how we will measure and also report on our carbon footprint. And that is available, as said, in our annual report. We have done scenario analysis. That is also one way to see to what extent you are aligned with the Paris Agreement and what your challenges are in that area. And having the carbon footprint, as said, that is a report. You're talking about what I spoke about before, automatic, here it says strategic, but rather thematic sustainable investments. That is another goal that we have. And those specifically will relate to the SDGs. We are also mapping, not measure the outcome, but mapping our investments to a number of SDGs when it comes to water, when it comes to sustainable cities, when it comes to climate, when it comes to life on land, etc. So having investment in certain areas, timberland, infrastructure, renewable energy, green bonds, but also in property. We are owners of direct owners of real estate companies, among others, one of the biggest ones that we have in Sweden, Vasakronan. Those are also working for sustainable when it comes to green buildings, certifications, etc. So there, as I said before, there are many ways to drive sustainability in your portfolio. We still have to learn how to measure this in a meaningful way, because there are a lot of things you can measure. The thing it should be meaningful. It should build up to something, and it should be a driver for continuation. I'm not in any way against measuring, but you should be careful with what you are striving for to measure, and that it, as said, is meaningful, and you can build something on what you measured before. That relates to talking about real estate and property. That relates to our the third point here, that we are directly owner of unlisted companies, both in real estate and also infrastructure. And with that, you also have ambitions to build sustainability, sustainable cities, sustainable green energy, infrastructure, etc. And that is all part of both our ambitions when it comes to sustainability, when it comes to thematic investments relating directly to sustainability and the SDGs, but also to what extent you measure, to what extent those measurements are input in the development and evolution going forward. So it's all linked together. There is no, so to say, one way. There is no clear, as we see it, the magic silver bullet to how to do this. You have to work on many areas and levels. Heidi mentioned, sustainability have different baselines in different areas, within different asset classes, within different geographies, and at different times. And all this you have to take into consideration, and to see that the aim is to drive this sustainable investment, sustainability forward, so that we create that the sustainable financial system, the sustainable economy, and all those bits will hopefully contribute to building that. And it's teamwork. We talked about teamwork. We talked about the football team to start here. This is what we have to do. And it involves us all, from investors to regulators, policymakers, prime ministers, down to the individual consumer.
And that takes me to my question on the role of regulators, but I'll put forward a quick question to you as well, and Charlotte, from an audience member, regarding your asset allocation strategy at AP3. and specifically around, he says most of the alternative investments of AP3 are in Sweden. Is there a reason for that? Is it simply home bias, or is there something else?
No, I would say it's a home bias. I mean, once again, you have to be able to do your proper due diligence and understand what you are investing in. And I think most investors feel more comfortable to invest in a home market. But also that also depends on your organization, your culture in your organization, what resources you have, what knowledge and experience you have amongst your employees, your portfolio managers, and also what beliefs you have. So it's again a multifaceted thing, but doing more investment in your home market makes us feel more comfortable, in the meaning that you can both control the risk but also see the opportunities, and to have them closer to you makes it, that's why we have the home biases with many investors, the tendency to invest more in your home market.
Thank you. Heidi, if we talk about the role of regulators and what role they play in ESG or sustainable investment practices in Norway, what can you say about that? And are there any good practices that we can learn from? What advice would you give regulators in Jordan so as to ensure the right balance between regulation and innovation is being encouraged?
There hasn't actually been any regulation when it comes to sustainability in Norway at all, actually. But still, the government has played an important role because it has set very clear standards to its own government pension fund, global, as the sovereign wealth fund in Norway is called. By that, it has really created a standard for the Norwegian market as well, which has been very helpful in driving the sustainability agenda forward. We in KLP, we also try to be very close to what the government pension fund is doing, and of course we do our own things as well. But also for smaller players, it has been quite helpful to have the standard setter in the market. And of course, it has also increased attention and the level of knowledge in the Norwegian society around sustainable investing in general. So that has been an important role that the government has played, although it hasn't had any regulation. What we can see now, again, referring back to what's happening on the EU level, there is not any specific suggestions or proposals when it comes to new regulation in Norway as of today. But as I mentioned, in the EU, there is a lot linked to the taxonomy, but also linked to solvency and risk management, where there is, we expect now proposals where we as investors are obliged to report more. We're also getting requirements as to where sustainability has to be included in risk management and risk functions within the organization, and that will of course also apply to Norwegian investors later on. And also the financial authority has also get an assignment from the government now to assess the climate risk of the Norwegian financial industry. That is a process that is going on. I think they are now looking into data. They're now looking into what tools to develop and what tools to use. But that is also an example of how the government so far or is planning to play a role. One point that I think that is worthwhile highlighting is transparency. Again, the government in Norway has played a role in that it decided that the sovereign wealth fund must be transparent in its processes, in its practices, and and publish quite a lot of information about what they're doing, or from exclusion to ownership to expectation documents, etc. And that is also very much aligned with what KLP has had. Transparency has really been a core to us in all these years. And I think that has been really, really important. It is about legitimacy and trustworthiness to our beneficiaries, of course, but it is also about developing a field that is unmature still. So being transparent for us has been a way of this is how we think, this is our analysis, but being transparent means that we can have that dialogue with other stakeholders, with other investors, and that transparency has in that way been a way of pushing us forward. So I think transparency in practices, or if a regulator is planning to start somewhere, I think transparency, that's a good way to start.
Yeah. And Charlotte, how does that compare to Sweden, and what would your advice be to regulators in the region to incentivize good behavior and disincentivize bad behavior?
Well, I totally agree with what Heidi is saying, that transparency and also having clear definitions and standards, what would you actually mean? Because as sustainability or ESG or responsible investing has so many different interpretations, you have to define what you're actually meaning with it. And so transparency, clear definitions, but also what you set out to what you see as your role in this development is really important. And at the same time, when we talk about us all having a task in building this sustainable or building sustainability, we have to have access to the right data, the right information in the right format. There is loads of information out there, but we have to find way to use it, and reporting and transparent and clearly defined reporting is I would say the prerequisite for achieving that.
Thank you, Anne Charlotte. Let me take a question from the audience on what you think impact, or what has been the impact of COVID-19 on commitment of pension funds towards sustainable investing. Do you think we're going to see more pension funds moving in that direction, or is it going to delay our sustainability agenda? Who would like to take that question?
For me?
Well, yeah, oh, sorry. Please go ahead. Well, I think that COVID-19 is actually helpful for sustainable investing for two ways. One way is, let's say, not really true in my eyes, but it helps that this year a lot of sustainable funds are outperforming the benchmark during, let's say, the COVID-19 crash. And that is because sustainable funds usually invest in the better quality companies, or are investing, like my fund, in, let's say, the longer term themes, which are still there also in COVID-19. And therefore, the performance was very good. And a lot of, let's say, commercial asset managers are going to use this to push sustainable investments. So I don't really believe that sustainable investing is automatically getting you outperformance, but this year helps. But also in another way, I think it's going to help, because this year we have seen what a global event can actually do for society. And now we are talking about a disease like the flu, COVID-19. It's somewhat different than the flu, but it is a kind of a flu, which actually disrupts the entire society. And that makes you think what actually climate change can do. If we get a heating up of the earth, then, well, the problems are going to be a lot bigger than COVID-19. So I think that this is opening the eyes of a lot of, let's say, the regulators and the governments around the world, that we should address these serious issues. So I think it's going to help sustainable investing.
Thank you. And you had a comment on that as well? Will we move forward or will this hold us back?
I think temporarily it put a bit of a halt to sustainability, because the focus was more acute on what was really happening, the disruption that Dirk mentioned. Going forward, I think COVID-19 has shown, once again back to UNDP when starting this, the weaknesses in our economies and society. For that reason, it might be obvious that we need to do something that is different. That's why we have the ambitions of greening the economy now, building back better, etc. Because COVID-19 has shown us the very obvious weaknesses, what happens when the economy or societies comes under stress. So it might help, but there's a very important task to see that all the money that has flushed the markets now are really used in a sensible and responsible way, so that we don't just out of pure fatigue try to come back to something as it was before, because that was not sustainable. That had lots of weak links and vulnerabilities, and COVID-19 has maybe been an eye-opener for that. It's also been an eye-opener what the targets that we have set out, for example, the Paris Agreement, when you were able to see blue skies in Delhi again for a short period, what it requires for us to achieve what we have set out. So it is an eye-opener. It might be a big opportunity, but we have to navigate very carefully to see that we actually use that opportunity.
Deb, let us know your thoughts on that as well. And if you can also talk to us about what you see the challenges and bottlenecks that prevent sustainable investments from scaling and going mainstream. What can be done to help us think just beyond impact investors, but to actually take impact investing mainstream across investors?
For me?
Deborah, your thoughts on the impact of COVID and how do we take impact investing mainstream?
You know, just a few comments on the impact of COVID, and I would agree with, you know, my colleagues here that it has really, I think, underlined the importance of sustainability from our perspective. And I think we have undertaken a, you know, a research across the organization just recently, thinking about the themes that have arisen from COVID and what those implications are. And it really helped to really sort of catalyze or prioritize, you know, number one, ESG and climate change, and then thinking about inequality, right? Specifically, when we think about, you know, the job losses, we think about disruptions from digitization. So I think all of those, you know, factors that, you know, we are looking at from COVID is really helping us to prioritize things. And I think climate change is really that big one. I think Dirk talked about it in terms of, you know, COVID really pointed out how interconnected the world was and how a single factor can really kind of impact the entire global economy. And that is the reality of climate change, is that everything is interconnected, and we could have an episode with regards to climate change that, you know, we will have much far greater implications and impact than COVID-19. And there was a cartoon I recently saw, and there was a tidal wave with COVID-19, and then right behind it was a slightly larger tidal wave that said recession. And then, you know, right behind that was a massive, you know, tsunami that was called climate change. So I really do hope that, I think it will catalyze more investors around the world to really think about the impact that we are having on the world and the kinds of things that we need to change. If I think about maybe the roadblocks to it, it really is, you know, the idea that we tend to look at historical risk and return. We tend to look at how, you know, energy markets or oil and gas markets have performed, and that is what our analysts work on, and that is what they look at when they do their models. They understand these traditional industries, they understand how to risk it, they understand how to price it. And when you think about impact and SDGs, this is all forward-looking information. There is no, you know, historical precedent. There is no historical data to look at and say, you know, is my models correct? Can I forecast this correctly? And I think, you know, that our team of investors are very reliant on the numbers, on the analytics, on the fact base and evidence to sort of support an investment decision. And I think, you know, when you think about forward-looking factors, it's very difficult to capture in our existing modeling. And I think that's probably, you know, part of the roadblocks to doing more in impact is being able to sort of show and prove the point through our investment models and thesis that this is an investment that we're comfortable in. You know, and that said, we spend a lot of time, maybe my team, in terms of engaging, talking about themes and talking about what if, and really looking at scenario analysis. And a lot of our COVID work was really based on, you know, looking at potential ways the world could unfold as a result of COVID, as a result of climate change, and then really taking the organization through some thought exercises on, you know, what are the implications for different sectors? What are the implications for the investment asset class itself? And then, you know, from there, you know, how do you sort of rethink how you think about investment strategy and investment decisions?
Yeah, I mean, that's definitely aligned with our thinking, and we're hoping that this crisis will be leveraged to rethink how we do things and make people realize that you cannot go with completely disregarding the impact of your business on society and the environment.
Yeah, and I think that's the other aspect of COVID, is that you can't really, you know, just think in terms of the company in isolation from how it interacts with the world around it. You know, both impacts to the company, but as well how the company in turn, you know, impacts.
I'm going to come back to you on a question on inequalities, because you touched upon that, and there's a question from an audience member. Dirk, what are your thoughts on how do we take impact investing mainstream? How is it no longer a niche segment within the investment community?
I think one of the most important most important things for getting sustainable or impact investing mainstream is concentrate on the possible returns. So don't make the regulator say, well, you have to invest in these kind of sustainable funds, or you have to have invested your portfolio in for a certain percentage in sustainable funds, but just concentrate on the returns that companies make that do good for society as a whole. And for that, and the other participants already pointed to that, we need a lot of transparency. A lot of transparency for the companies. And we need a lot of, let's say, standardization. Because if you force companies to be transparent on the impact they have on society, on the CO2 they are emitting, on the pollutions they are causing in certain areas, etc., then investors and society sees what this company actually is worth to the capitalistic system. And in that way, investors will easily flock to those companies which are sustainable in the longer term and will get you a good return. Because I think returns for pension funds and for investors are the most important thing. So if you want to make sustainable or impact investing go mainstream, you have to focus on returns. Otherwise, it will not go mainstream. And you see it already happening, because ESG, you can say it's already pretty mainstream in a lot of areas around the world, like Europe. It's also getting more mainstream in the US, and that is not because investors are suddenly better people, but just because investors are more scared about the negative effects companies are having on society, and in the end, governments will make them pay. And I think that is the way to go forward. A very simplistic view, but very hard to execute, I think.
Yeah. I'm just conscious of time, and so I want to ask a question. So I'm going to ask a question from an audience member that maybe we can do those as closing remarks from each of you before we hand over to the head of UNDP. And the question is, what advice would you give pension funds who are on the brink of embarking on the sustainable investing journey? If you can, I don't know, give them 3 things to start with, or if they go into the office tomorrow, how can they start putting their plans in place to move in this direction? Shall we start with you, Anne-Charlotte?
That's a big task. Thank you. I said here, keep it simple, and that is a very difficult thing with something that is as complex as sustainability and the challenges that we have ahead of us. But I think you have to start with to know who you are, what's relevant and financially, talking about return, material in relation to the task and the mission that you have. Then you have to find your beliefs and your convictions, because that has to be clear. You have to invest in knowledge and tools to really to be able to operationalize or implement those beliefs and convictions. And then, as we've also said, and has been obvious here, you have to cooperate and collaborate and build on what is already out there, because you don't have to start from scratch. There's a lot of experience and knowledge out that you can use, but you have to know where you want to go and how you do it. So why, how, and what will come out of it? Find out those things, and hopefully it will help you on the way.
Thank you, Anne-Charlotte. Keep it simple, define materiality, collaborate, build on what's already out there, and invest in the needed resources. Heidi?
Yes, start drafting a policy. When you come to office tomorrow, start Googling 10 examples of like-minded investors out there, find out what their policy is, and start drafting your own. With a lot of those points that Anne-Charlotte just mentioned, what is sustainability to you? What do you mean with it? What tools are appropriate for you that could be in your toolbox to use? And try to start an internal process on that with the top management, the investment team, and then look for the board agenda. When can you get it on the board agenda to start the discussions in the board as well, and to finally then get that policy approved by the board as well. I think that has been important to us to have the key document. Of course, a key document doesn't say it all, but it's still it's really the guideline that you have, and that will help you to navigate those complex issues. And then to start to see in all mandates that you have, all parts of the portfolio and all mandates, and see where to start. Okay, what could be the very first step for each and every mandate?
This is great. I think we're developing an action plan as we go through the panel. Deborah.
Yeah, I would say from our standpoint, it's really about awareness, knowledge, and application. So you need to drive awareness of these issues across the organization. And it may sound silly that everyone should know about this, but they don't. Some people are in their sort of little asset class silos, and they really don't think more broadly outside their asset class in terms of what's going on. So I'd say awareness. The second piece is there's a lot of information out there. Some of it is great, some of it is not so great, not very helpful, and it creates a lot of confusion. So I think you really need to build up people's knowledge base across the organization on the issues, on the evidence, on the approaches that, what are the peers doing. And then, it gets to application, right? So you really need to start putting, the knowledge, resources, and tools in the hands of people and just get them to start using them and integrating that into a regular process. I'd say the other important point is it takes tone from the top. So you need to engage upwards towards the CEO, CIO, the board. That is critically important. They set the direction for the organization. They set the priorities, and they need to make this a priority. And then at the ground level, you need to have the individual portfolio managers really kind of drive it from the bottom up in terms of how they tailor it to their approaches, how they tailor it to their investment strategy. I think it's a bit of top down and bottom up.
That's wonderful. Dirk, we're ending with you.
Yeah, well, that's a difficult one, because I agree with all the things that are being said with the other. At least
one new advice.
Well, I have one advice, and I think it's a really important advice as an investor, because you have to make sure that your investment philosophy is aligned with your sustainability agenda. And with that, I mean, if you are a pension fund, which is, let's say, short-term or which is focused on short-term value investing, don't try to invest in longer-term sustainability investing, because it's a different way of investing. So if you have, you cannot change a value portfolio manager to a growth portfolio manager, because it's in their veins. So you have to choose a strategy that really fits your sustainable beliefs. For PGGM, it's long-term investing, looking for quality growth companies which are sustainable. So it's that simple, but I think it's one of the most important aspects, because you need to generate good, solid returns. Otherwise, you can have all the support in your company that you have. But if you underperform your benchmark for, let's say, 5 years in a row, then you will lose this support. And I can understand that, because we have that as pension fund, we have this fiduciary duty, and you cannot change that. Yeah. So that would be my advice.
I think that's a great list. I'm going to collate that and share that with all of our attendees, because not just pension funds, and we've got some private equity firms here, we've got some venture capitals on the call. I think this is a great way for people to think about how do they integrate impact into what they do, and for it not to be just lip service, but actually understand that this is what's going to result in long-term sustainability and resilience of your funds, and with that, the economy. I'd like to thank you all for your time. I really do hope we get an opportunity to invite you all to Jordan soon, because as good as the technology is, it doesn't replace the value of being able to network and talk to you in person. Thank you for your time. You've been very generous. I'd like to hand over, and I'm going to invite onto the video the head of UNDP Jordan, Sarah Ferrer-Olivella, for her closing remarks. Sarah, over to you.
Thank you. Thank you very much, Rasha. And I just wanted to start by thanking Charlotte, Heidi, Deborah, and Dirk, really for your contribution here. I think you have provided with lots of insights and your experience on the best practices we have. We really were hoping to have you here, and we still hope you will be able to make it here, not in the not too distant future. Also, I wanted to thank very much Rasha for an excellent moderation of this session, because this is a platform we are trying to create to exchange and to learn from each other. And I think many of you have touched upon this issue. Perhaps I'm not going to say concluding remarks, but perhaps just to highlight 3 things that stayed with us. One is the fact that you all mentioned that COVID-19, if anything, disrupted the economies, societies, and you have all agreed that sustainability, it was already important, but now it's even more important in your investment decisions: sustainability, climate change, inequalities equation, and ESGs. So that makes sure that not just of you, but also your stakeholders and the ones who invest in you, but also it helps you going forward, perhaps on prioritizing those investments in a bit more deliberate, intentional way. I also picked up from you the need, and we are still a long way for going mainstream, but clearer definitions on the impact. And what do we mean by impact and that positive value creation for society? What actually that means? And I mentioned, and you mentioned, are we talking about ESG 2.0? Is this about, or is it much more? So this is something that I think, as you were providing very valuable insights, and I think this is something that we will continue to work on as well as UNDP. Also, for as institutional investors, and your pointed insights into the need and the importance of standardization and transparency as tools for driving change, driving awareness, and driving greater impact. And I think this is something that I picked up from you, but also the fact that you also welcome greater collaboration among the industry, because not any single one of you cannot drive them change, but the fact that there is greater collaborations around these issues can drive positive company behaviors. And I think this is something that I actually picked up from you. It's important as well that you highlighted how you see sustainability, what the sustainability means from you, and is one of concept, again, perhaps greater clarity, or as the last speaker said, perhaps each one of us has to interpret it. Is it responsible investments we are talking about, or is it financial returns? So the issue of having this shared understanding and these common grounds to have this dialogue among the stakeholders to drive this and contribute. I just wanted to conclude by saying, one of the important roles of although they cannot do anything, but definitely they can create spaces for greater transparency, and this transparency also on the disclosure of returns and how impact is getting reported, as a way as well to educating the broader stakeholders and being all of us more aware. So by this, I just would like to all of you who are listening and our speakers, first of all, thanks again for your contribution. Tomorrow we will have our last of our 3-day series of conversations, and tomorrow we'll be investing in emerging and developing markets. And this is something that is very close and dear to Jordan. And that's why we have an audience which is primarily Jordanian, but also regional. And how we can actually support an economy like Jordan to grow this impact economy market. So I'll just stop here and thank you, each one of you, for your contribution and your insights today. Very valuable. Thank you. Over to you, Rasha.
Thank you, Sarah, and thank you to all of our speakers and attendees, and hope many of you can join us again tomorrow.